Okay, so we have Australian trade balance coming out. Now, what is trade balance? Trade balance is a difference between imports and exports. What you do, you subtract imports from exports and you get trade balance. Now, theoretically speaking, as the country exports more than they import, they have to sell stuff in their currency. You know, whoever is buying stuff from them has to convert their currencies into, let's say, Australian dollars, and demand for the Australian dollar goes up, and therefore value of the Australian dollar goes up. So hypothetically speaking and theoretically speaking, when the trade balance is more positive than expected, the currency strengthens speculatively. On the other hand, when the trade balance is more negative than expected, the currency weakens based on that. Okay? Now, of course, this is all theory. I mean, bottom line is, fundamentals do not move the market. It's people's perception of fundamentals that move the market. Only supply and demand moves the market. So it really largely depends on what traders consider good or bad, and they move the market.
Warning.
So
Secret news weapon has lost its host connection.
Is kind of a very crappy report that barely moves and it retraces very quickly, even though theoretically it should do the same thing as other trade balances. Australian trade balance, believe it or not, but it's one of the better ones to trade. It's one of the better trade balances. Trade balances become more important when interest rates are stable in countries. But right now we're going through the process where everybody is either hiking or cutting rates, and there's a lot of volatility in interest rates, so the trade deficit and the trade balances have really have lost its importance, but they're going to gain the importance again when we're off of the interest rates. But even so, even considering the current situation, the trade balances are still somewhat important. Now, what's been happening in Australia is that last year Australia went through some very bad drought, like the worst drought in like 4 decades or something like that, since the 70s or even 60s, and that like annihilated almost all of Australia's wheat crop, and obviously and some other crops, and because of that they couldn't export the crops, and they had to actually import some crops in order to recover some of the lost crops, and so people could eat. So that affected the trade balance negatively. What also happened is that between November and March they had some very, very bad cyclones going on in Australia, and as some of you may know, Australia is world's biggest, I hope I'm not lying on this one, as far as I remember, it's the world's biggest iron ore exporter. They export more iron than any other country, and they have the biggest ore exporting companies operating there. And a lot of the stuff that's being exported, such as iron ore out of Australia, is being exported from ports on the west coast, and those ports have been closed because of extreme bad conditions such as cyclones and stuff. That's one of the reasons they think that the trade balance came out so bad last month. It came out negative 1.6 billion, or negative 1622 million. So right now we have the trade balance coming out for April, and those ports have been reopened in April, and the exports of ore, iron ore, is expected to rise by at least 20% because of that, and the drought effect is almost over. There is now new crops that are being gathered and stuff in April. It's spring, and that's also boosting some of the exports, and it lessens the reliance of Australia to import as well. So we'll see what happens. Basically, they think that the trade balance will shrink mostly due to exports increasing and imports decreasing. Now, there's really no expectations for imports and exports, but we only have expectations for trade balance. But basically, I can tell you that imports last month were at about 19.5 billion, and the exports last month were about 17.8 billion. And obviously, if you subtract one from the other, it becomes, 1.6 billion, approximately the difference. I believe for those of you that have the new weapon, the beta group, you should be able to, let me just actually check myself, but I believe that new beta groups, they actually have the import and export component listed. Nope, they don't. It's a little bit of a problem. I probably forgot to put that. That's not a problem, but it would be nice to have that. I'll make sure to have it next time. But anyway, when the new weapon is released to everyone at the end of this week, you will have a lot of other reports along with whatever we're watching. But I'll tell you live where the exports come out and imports come out. Let's go back to our trade plan. Here's the thing. In my experience and in my opinion, considering the current situation in Australia and considering where the Australian dollar is trading, a deviation of 600 or more, I think could easily move Australian dollar by about 35-40 pips. Okay? A deviation of 400, I think, would move Australian dollar maybe by 20-25 pips. As you can see, I put deviation of plus 400 or minus 400 there to buy Aussie USD or sell Aussie USD for the 10 pips limit triggers. And slippage control is crucial on this one, okay? I am not going to be trading on Oanda unless the bigger deviation is reached. If the conservative deviation is reached, I'm going to have Aussie USD set up to trade on Oanda with a 5 pip limit trigger, 5 pip bound, okay? On my MB trading, I'll be using the 10 pip bounds for the 400 million deviation and the 15 pip limit orders for the 600 million deviation. So we'll see what happens and where that comes out. Okay, I hope you're more or less clear on the trade plan. You're clear on what trade balance means and the current situation with the trade balance in Australia. And let's just see what happens there. We have a couple of other things coming out at the same time, mostly private capital expenditures, and that's a quarterly report. It shouldn't cause much of a stir up, and much of a conflict in the trade balance if the trade balance deviates significantly. But we'll definitely keep an eye on that and see if it gives a conflict, and if it does, we may take advantage of that to enter at a better rate after spike. Coming up to about 15 seconds until the report. 10 seconds. 5 seconds. Okay, came out at negative 962, a little bit worse than expected. Private capital expenditures came out way better. Revision, almost none there.